Hello,
Hello. Hi, Palak. How are you?
I'm good. I'm good.
I'm excited to solve the case.
Yeah,
So, do you watch cricket?
not a lot.
So today we have a case related to cricket. Your client is actually a PE fund, and they've approached you to advise them whether they should buy an IPL team.
Okay. So, just to reiterate the problem statement, our client is a PE fund and they want advice on whether they should buy an IPL team or not.
Yes.
Okay, I'll just take a couple of minutes to structure my thoughts here.
So,
Okay, before we start the analysis of the case, I would like to ask a couple of questions.
so,
Why or what is the objective of the PE fund when they want to buy an IPL team?
so in this context, it's actually not driven so much by the fund. Instead, they've received an invitation to bid for the IPL team. Uh, and they need to figure out whether it is even worthwhile considering this bid or not.
Okay.
Uh, But in terms of the metrics that matter for them, since they are a PE fund, they only care about the financial returns.
And does our client have any past experience in managing sports teams, or do they have any sports teams in their portfolio right now?
Yes, so they have a couple other sports teams. They own one baseball team and a basketball team in the US, but they have no sports experience in India.
Okay. And so a couple of questions about the team itself. Who is the current owner of the team?
So interestingly, that's another PE fund. So
Okay.
that fund is looking to make an exit, and that is where they've invited bids from other potential buyers.
Okay. And what has been the performance of the team?
It's been a bit fluctuating. So I last year they came seventh. Before that they came second. The year before that they were fifth. In general, in the IPL, teams are very competitive. Like the tournament itself is very competitive, and teams tend to fluctuate a lot across the time.
And when we look at the our client who's looking at considering buying the team, do we mean 100% stake or majority stake, or like what percentage are we looking at?
So, for the sake of simplicity, you can assume here that they are buying out the whole.
Okay, I'll just take a couple of minutes to
So,
structure my thoughts further. Okay. Uh, so let's delve into the analysis of the case. When we look at the acquisition or the buying of an IPL team, we can look at two different types of factors which we can consider before we place a bid or before we decide on buying the team. One is the financial factors, and the second is the non-financial factors. Uh, so under the financial factors, we can look at two different things. One is the standalone or the current value of the team itself, and the second one is the value that can be added by the PE firm itself. And under non-financial, we have things like portfolio fit, entry strategy, exit strategy, and risks. Which would you like me to evaluate first?
I think we can start with the financial.
Okay. Under financial side, should we start with the standalone value of the team?
Yeah.
I'll just take a couple of minutes to structure my thoughts there. Okay. Uh, I'll start with the standalone value of the team. Now, when we look at the standalone value of the team, we again look at three different factors. One is the profits expected by the firm, like for the team. The second is the WAC or the weighted average cost of capital of the firm of the team, and the third one is the growth expected for the team itself, or the growth expected in revenues or profits. Uh, should should I start with
So yeah, maybe you can start with profit.
Okay. So when we look at profits, we look at two different things or two different factors. One is the revenues and one is the costs. Now, when we look at the revenues for an IPL team or for a sports team, there are generally two different buckets which we can look at. One is the revenues from playing the league itself, and the second one is all the marketing revenues that the team earns. So under the league, we have different factors like the prize money, the ticket sales, and the broadcasting rights or the revenue from the broadcasting or content rights. Under marketing, we have like sponsorships or brand endorsements, basically all the advertising revenue. Secondly, we have revenue from all the merchandise sales, and thirdly, any other royalties that the team might be earning. So, do we have any information regarding any of these revenue streams?
So you said that uh, they were revenues from the league and revenues from marketing. So in terms of revenues from the league, the overall prize pool for the IPL is roughly around 50 crores. Beyond that, the team, you can assume that the team earns around 10 crores further from ticket sales. And the IPL recently signed roughly 8,000 crore per year broadcasting.
Okay. Uh, So when we look at the prize money, since the performance of our team has been pretty fluctuating and the performance for all teams stay fluctuating throughout the league, is it okay to assume like an average for the prize money, like 50 by 10, 5 CR estimated revenue from the prize money for the next year?
So the actual distribution is not uniform. Your winning team gets around 20 CR, the second team gets 10 CR, and then from there. But I think it's okay for the sake of simplicity, this case you can use
Okay. Okay. Now coming to the broadcasting rights, how is that distributed vis-a-vis the league itself or like the cricket association as well as the teams? So is it distributed based on the viewership or the popularity of the teams, or is it evenly distributed?
So it's a fixed contract. It's actually been signed for 10 years. It's fixed. This broadcasting deal is shared, the revenue is shared between BCCI and the individual teams. So BCCI takes 50% of the revenue, and then the remaining is shared between.
Okay. Uh, and this 8,000 CR, is it for 10 years or is it the annual?
So 8,000 is per year. The overall deal is for 80,000.
Okay, got it. So for 1 year, we take 8,000 CR as the whole broadcasting revenue for the league. Now, 50% of it goes to the BCCI, which leaves the teams with 4,000 CR. And assuming that 10 teams in the league, that leaves us with 400 CR for our team itself.
Okay.
So the total revenue from the league comes out to be 415 CRs. Now, do we have any information on the kind of marketing revenues that we can generate?
Yeah. So in marketing, I think you would cover some 2 3 types of costs, right?
Yeah.
2 or 3 types of revenue. So overall, from like all the advertisements and sponsorships, etc., you can assume that the team gets 170 crores, and then remaining any other royalties come up to around 150.
Okay, sure. So the total marketing revenues come out to be 285 CRs, which leaves us with the total revenue for the team for 700 CRs. Does that sound right?
Yeah.
Okay. Uh, Now let's look at costs further.
Mhm.
I'll just take a couple of minutes to structure my thoughts there. Okay. So when we look at costs, we can look at it in three different buckets. One is like COGS, which includes all our expenses related to the bidding of the players, the salaries of all our support staff and the coaches. Number three is like the stadium operation costs, then the equipment costs, and the other logistical costs that we incur. The next bucket that we look at under cost is SG&A. So in that we look at a license fee that we pay to the Cricket Association. Second would be like a marketing expense that we incur for the team, and the third would be any other admin overheads that we incur. Now the third bucket that we look at is the post EBIT bucket, which includes our interest on any debt we raise as a team. Um, the second would be the depreciation on the stadium or the equipment, etc., and any amortization on any goodwill that we have. And the third would be any other net non-operating profits or costs, basically.
That's a very detailed enough. I think we can largely uh, ignore the post-EBITDA cost
Okay.
and focus primarily on the costs and the SG&A. So I think in cost, the first thing you mentioned was the player level human resource cost. So you can assume that's around 100 crore and then everything else adds up to 200 crore. So all your moving expenses in terms of the stadium, logistics, equipment, etc. Um, and SG&A, you said had marketing expenses and admin overhead. So
Yeah.
I mean, you can assume both of those add up to another 100 crore.
Hmm.
And the team has to pay BCCI a fixed annual fees of 100.
Okay.
Yeah. Since you mentioned post EBITDA, okay, you can take post EBITDA also to be another.
Okay. So our total costs come down to 600 CR. And earlier we had calculated our revenues as 700 CR. So that leaves us with profits of 100 CR for the team annually. Now, these projections are only for the next year, right? But to evaluate the firm or the value of the firm, we need two more factors, which is the WAC and the growth rate. So, do we have any details around these two factors?
So the PE fund is looking to determine how it can estimate. It has an initial estimate of around 10% growth
Hmm.
for this team.
Hmm.
But you can think in terms of like if they were to triangulate this growth rate, what are some ways that they can.
Okay, I'll just take a minute
Sure.
to structure my thoughts there. Okay. So when we look at growth, we can calculate it or look at it in a lot of different ways. Uh, so the first one that we can look up is if there are any announced plans or estimates by any teams in the IPL or the Cricket Association itself. If there's a number there, then we can use that, or maybe make some adjustments to that and use that further. The second one would be like a time series analysis. We can look at the growth of the league in the past years and try to predict what could be the growth in the future itself. Uh, the third one that we can look at could be using proxies. So we can either look at the growth of other sports, other popular sports in India, or we can look at the growth of other leagues at the level of IPL abroad somewhere, maybe a football league which has been growing at the same rate, started at the same time, something like that. So we can use some proxies there. And the fourth one, which we can use as like a adjusting factor, is we can look at the like a market share analysis or a penetration rate to see how much cricket has already penetrated in India and what is the market share that's left for the league or the sport to capture. Because if it's already very highly penetrated, then probably it won't be easy to sustain that growth rate.
Yeah, I think that sounds quite good.
Hmm.
So let's go with an assumption of 10%.
Okay.
Now if the hurdle rate here is 20%,
Hmm.
for the people, how would you go about?
Okay. So based on my understanding, preliminary understanding, hurdle rate is not really equal to the weighted average cost of capital for the team itself. But will it be safe to assume for simplicity that that is the cost of capital there that they would assume for the team, or like should I go ahead and do we have the capital structure of the team itself?
That's a very good observation. Yeah, hurdle rate is not the same, but yeah, in this case, you can assume that the gap was
Um, Okay. And so here, since we are buying the team, do we have any timelines for how long we're buying the team for? And do I include that in the calculations? Or since we're buying the team, we assume it to be going till perpetuity and take the present value of that perpetual like cash flows.
So the PE fund is actually looking to hold the team for a period of around.
Mm.
But again, for simplicity of calculation, you can use the one.
Okay, sure. Um, So, for the perpetuity value, we can use the formula P by R minus G. Here, we'll also make an assumption that all our profits translate to cash flows. Uh, or is like, do we have any number based on like past reports of the team of how much profits turn into cash flows?
You can assume that it's all.
Okay.
So technically, you would need to.
Hmm.
But again, for simplicity, you can use assume.
Okay. In that case, we do 100 by 20% minus 10%, and come to a figure of 1,000 CRs as profits. So now we're done with the standalone value of the team itself. The second bucket that we look at under the financial factors is the value add by the P firm itself. Uh, I'll just take a couple of minutes to structure my thoughts there. Okay. So when we look at the value add by the PE firm, we can look at it in two aspects. We can either look at the increase in revenues that the PE firm can bring about, or a decrease in costs. Uh, so under the revenue bucket, we can look at the improvement in the team performance that the P firm can bring about, which can lead to an increase in the prize money for the team. And secondly, we can look at like marketing or brand endorsements. So since the P firm has past experience with managing other teams, even though they are abroad, but they have some marketing sense on what brands endorse teams usually, and they have previous marketing experience which they can leverage to increase their marketing revenues. Do we have any information on the revenues that they can increase or bring about?
So let's say that the PE firm is assuming they can increase the value by.
Okay. Uh, and that's just revenue increase, right?
So this is across revenue and
Okay. Should I also give you examples of how we can improve costs?
no, I think it's okay.
Okay,
Just conclude the financial.
sure, sure. So, since our profits are no, since the perpetual value of the firm came out to be 1,000 CR, and the PE firm can add 30% value to that, uh, the value or the financial value of the team itself comes down to 1,300 CRs. Does that sound right? Okay. Uh, Now coming to the non-financial factors. So we have a value of the financial value of the team. So we know that our bid should be lower than 1,300 CRs, but we are unaware of the risks associated with the investment right now. So after evaluating the non-financial factors, we can have a range or a particular number that the PE firm should bid, or even if they should bid or not. Um, so firstly, let's look at the portfolio fit for the of the team for the PE firm. When we look at the portfolio fit, we look at the objective of the PE firm, which we know right now is purely financial or profitability. Secondly, we look at any past experience or capabilities that the PE firm has in managing a team, and experience. Sorry, I'll just take a second here. And we obviously look at the value add that the PE firm is going to bring. So here, objective is profitability. We know that the team is profitable, but obviously those profits are built into the value of the firm itself. Uh, Secondly, past experience. We know that the PE firm has past experience, but they only have it in managing non-cricket, non-Indian teams. So this is kind of a new venture for the firm. And the third one is value add. So 30% value add for the team sounds a little higher to me because the team was already owned by a PE fund. And if it was possible to bring such synergies to a team, they might have already brought it in. So the number 30% might be a bit of an overestimate here. Uh,
Okay, so that's a good observation. You mentioned earlier that the objective here is profitability.
hmm.
But the team is profitable, but like, how would you go about determining whether the acquisition can be
Okay. So basically, the present value of the team for us comes down to 1,300 CRs. The venture for us would be profitable if we bid or if we're able to acquire the team at a value lower than that. And further, we look at the opportunity cost of investing such a huge sum of money in an IPL team. So if the PE firm is able to, generate higher returns in their overall portfolio or in their other investments, then probably this is a bad investment for them and they should not go forward with it.
So I think that sounds reasonable. Um, so you've covered portfolio fit. What is the other factor that the key function?
So there are two other factors that we should look into. The second one is the exit strategy. And basically, in exit strategy, we look at two things. One is the timeline. So we know that they have to hold the team for 7 years. And the second one would be the buyer availability or the interest in the team for buyers. Uh, and under that, we can look at like three different types of buyers that would be interested in buying an IPL team, which would come under like conglomerates like HLIT, CDLF, etc. The second one could be another PE firm, which does not sound very attractive since it would have already been owned by two PE firms previously. And the third could be any celebrity endorsers like Shah Rukh Khan, Preeti Zinta already owns some IPL teams. So any other celebrity who would be interested in buying a team.
Okay. So you mentioned earlier that uh, you know, the profitability here or the value add here would be questionable because then do you think it would be reasonable that another PE firm will buy this team out after it has already been owned by
No, that's when I mentioned that the the availability of PE firms who would be willing to invest in our team would be very, very low. If only if a PE firm has, let's say, very high or very rich experience in managing Indian IPL cricket teams, such that they can bring very, very high synergies, then only would it be a very attractive investment for them. Otherwise, we would have to rely on celebrities or like conglomerates for this investment.
Okay. So in this scenario, then how would you rate the exit likelihood?
So exit likelihood is obviously lower because even when conglomerates look at investing into a team, it's primarily for two purposes. One is obviously the profitability, and the second one is the branding or the marketing uh, aspect. Uh, but since the performance of teams are very fluctuating, if investing in it just for marketing purposes would not be very attractive for a conglomerate if the team does not perform well and they're out um, very early in the league or the tournament. So that could be a very bit dicey, and we might have to rely completely on celebrity owners or celebrity buyers who would be interested in our team.
Any other topic?
Yeah, so we also need to look at the risks that would come with owning an IPL team. I'll just take a couple of minutes to structure my thoughts there. Okay. So when we look at the risks associated with an IPL team, there are three buckets that we can look at. One is the league, the risks associated with the league itself. The second is the risks associated with the team, and third is any player-related risks that we're incurring. So,
So
um,
what would
yeah, sure. So when we look at the league risks, we can again look at like two, three different factors. One is the growth of the league itself. So we know that we've taken an assumption of 10% growth for the revenues, or for an overall for the league itself would be growing somewhere around that percentage only. But we know that cricket as a sport is already highly penetrated in India, and it might not be sustainable for such a growth rate. For it might not be feasible to sustain a 10% growth rate. Secondly, any new teams that might be entering the league will lead to a dilution of revenues for us. So we know that the broadcasting revenue is fixed and it's a contract for 10 years. But if any other teams come in, that we might have to share that revenue or the prize pool itself. Then the third risk that's associated with the league is any changing of the rules. So currently we have an upper cap on the players, on the bidding for the players. But if the association removes that upper cap, then it might pose a risk for us, as it might lead to overbidding and price wars. Uh, Thirdly, so that's like what I have under the league risks. Then we have the risks associated with the team itself. One is obviously the performance of the team. If the team does not perform well, it's a very we don't have the price pool, our ticket sales go down, etc., etc. And secondly, we have the brand value of the team itself. So let's say an important player like Virat Kohli leaves RCB, the brand value of RCB goes down. So similarly, if we have any legendary players in our team which leaves after a change of management, let's say, then hurt the brand value of the team itself.
Okay. So then how is this brand value different from the player perspective?
Yeah, that's a good question. So when we look at the player risks, there are risks associated with the player that are different from the brand value of the team itself. So things like if the player is met with an accident or an injury that benches the player for the entire league, then it's a loss for us. Secondly, if the player is involved in any corruption, let's say match fixing or betting or gambling, something like that, then it hurts the brand value of the entire team itself. And thirdly, the personal brand of the player. For example, they're involved in any social issues or any court cases, then also it hurts the sentiment of the public towards the team itself and would lead to a loss in marketing revenues for us. So these are some of the risks associated with the team that I feel that we would be incurring if we invest in this team.
Okay. So that's quite a comprehensive set of risks that you laid out across multiple dimensions. Now, given that there are so many risks, ultimately, what is your final recommendation to the PE plan? Should they go ahead with this investment or not?
I'll just take a minute to structure my thoughts there. Okay, so when we look at the risks of the firm, risks of the team itself, and when we look at the hurdle rate, that is like 20%, it's quite high. And we know that the hurdle rate basically would be very intrinsic to the kind of team itself. So I'm assuming that the risks that we have just discussed are built into the hurdle rate. Now, when we look at the bid value, we know that there are like 30% synergies. So like 300 CRs of synergies that is being added by the PE firm itself. And in an acquisition or in a deal like this, the synergy is usually split 50-50 between the seller and the buyer. So that would give us like an upper bid or upper ceiling of 1150 CRs for the bid. Having said that, we would want to be conservative about our bid because obviously there are a lot of risks and we would like to make some profits. So I would advise the PE firm to have a conservative bid of 1100 CRs and not go beyond that.
But your recommendation is that they should go ahead and put them.
Yeah.
Okay. Cool. I think that sounds good. You've done a very comprehensive analysis. We can wrap up the case here. Thanks
Thank
a
you.
lot.
Thank you.